able to see now. Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us here again this week, where we try to give you updates on everything that's happening in the markets and talk about different things financials. And this week we're going to be talking. We're going to bring you live updates from the Trump impeachment. No, I'm just kidding. We're not going to do that. That'd be very boring. It is underway right now. If you're interested, I'm sure there's several news channels that have that out there. We're going to talk about the markets. We're also going to talk about ESG investment, or environmental, social, and governance investment, as it's been a big part of the economic, I would say, recovery, or the economic growth for the last year, and certainly a big theme for 2021. So we're going to dive into not just what that means, but where to look for that and kind of the opportunities we see there. Before we jump into any of that, though, as always, keep in mind everything we do talk about is for information purposes only. Don't take this as advice. Do your own due diligence, or reach out to us. You can always reach us at mikeonmoney.com, or give us a call or email. Happy to answer any of your questions as it might relate to your portfolios or your situations. So as always, if you're watching us live here today, you have the opportunity to ask questions live through the Q&A button. We'll try to get to them today. If not, I will definitely follow up. If you're watching a replay, if you're listening to the podcast, again, just reach out to us there at the website. I will happily answer any of your questions and make sure we get back to you. And as always, any feedback, we love. A topic you'd like to hear. We're going to be doing, as always, we do weekly features. So last week we just posted one. You'll probably see it on the website in the next couple of hours. We just finished one up last week on wills, power of attorneys, and representation agreements, and kind of when to have those and why to use those, and the importance of each of those things. I know, a very boring topic this week, but we're always trying to come up with ideas, and we're going to be posting some new interviews, especially around this sustainable investment. As I mentioned in previous videos, it is a big theme for 2021. A lot of money flowing into it, so we're going to be bringing in some guest speakers who will specialize into that. So you'll see those on our Friday, sometimes Monday morning videos, depending on the editing, and podcasts as well. So we'll get those out the next week or so. So let's dive into what's going on out there in the news. This week, we're looking for the small business optimism index to kind of see where things are going. I actually expect that to be fairly good. I think we're seeing a little bit more optimism, especially in the small business arena, as the vaccine rollout happens. It is a little bit slower than I think everyone was hoping for, but I think the outlook for later this year is starting to get more and more optimistic, but we'll get that number later this week. Job openings and labor turnover survey for December. We did see in the US. In Canada, we saw increased unemployment as we lost more jobs. In the US, they did pick up a little bit, so we saw a little bit of drop in unemployment down in the US. Still 10 times higher than it was pre-pandemic. So, still massive economic recovery to happen there. But it did reverse the trend from November just slightly in December. So that was positive news. But we're looking to see some more job numbers coming out in the U.S. here shortly. And then also looking at the agricultural supply and demand estimates. That one's going to be interesting because we are starting to see inflation when it comes around to food, agriculture, especially in the emerging markets where certainly we in Canada here, we buy a lot of our goods from during the winter months, especially when things are as cold as they are these days. So it's going to be interesting to see what impact we're seeing on the supply demand there. And see how the food prices might be affected in the coming months. We did see the stock futures both on S&P and the Dow and NASDAQ kind of slipping a little bit. Not much, very small percentage, so showing a little bit of weakness or topping out. There's still a bunch of uncertainty, of course, around the new stimulus package in the U.S. and the continuation of COVID and what type of closures we're seeing there. So that news is not surprising, and it's something we're constantly monitoring right now. There is an overvaluation in certain sectors of the market. We've talked about them in past weeks, but we're looking for those value plays, not so much trying to ride that top end growth these days anyway. So just to stay on top of things, if you follow the internet stonk. So that's the meme around the Redditors who are out there driving up prices around the stock market. Hertz was again in the news in this last week. I talked about this Hertz last summer when this happened. Hertz, of course, we filed for bankruptcy. They went in for price protection. Usually means wipes out their business and certainly their equity. Their creditors stay around to reorganize the company and bring it back under a new equity offering. But the original equity offering would have been wiped out. But they saw their price skyrocket for no apparent reason. And again, that's a little bit of that Robin Hood buying frenzy. That was early stages. And again, if you follow these on a regular basis, we talked about it last summer. Well, now that's coming to a head, and then their equity is being wiped out. So all those people that ended up buying at the top there or driving that price up without any reason, of course, are being left holding the bag as those shares don't have any value. And of course, the GameStop story from 2 weeks ago now, a week and a half ago, is still playing out a little bit. Obviously, much lower than it was, and we don't see any real upward pressure at this point, but it's still triple what it was a month ago. So it still has a long way to go down. But obviously, a lot of people bought in that 400 range, and it's sitting in the $60 range now. There's still a lot of losers out there that are going to feel the sting of that surge. Bezos, if you haven't followed Jeff Bezos, the CEO of Amazon, founder of Amazon.com, stepping down as CEO. He's still going to be involved with the company, obviously on an executive level. He's shifted his focus to his space venture, Blue Origin, and also a bit more philanthropic activities in his charity. He wants to spend a bit more time just advancing his space exploration business that he wants to, I don't know if it's direct competition, but certainly directly on lines with Elon Musk of Tesla SpaceX program. So if you hadn't heard that in the news, not too much, doesn't mean too much for Amazon, I don't think, but we'll see how the new leadership may change things. Americans are kind of taking that buy now, pay later shopping during the pandemic more seriously. We start to see a lot of retail, especially, starting to offer this, pay later approach to sales. It's never really worked out for the buyers. I mean, it's great. You buy now, you pay later, maybe spread it over multiple payments. But generally, we saw this really popular for those of us who've been around for a while. This became really popular in the late 80s, early 90s, after a recession. And you know, a lot of people got hurt in it because if you read the fine prints of if you miss any of those payments or down the road, the interest is very punitive, and we're starting to see some of those things come out now. So keeping an eye on those retail numbers to see how much dollars are tied up into that pay later kind of structure, and see how many buyers might get caught with either credit problems or some very, very high repayment numbers. The Democrats are set to back more than the $50 billion transportation sector kind of bailout. We've seen this been going back and forth. The same thing in Canada. We're talking about the airlines, transit systems, airports, railroads in the U.S. Here in Canada, it's mostly around the airlines. We still haven't got a package for them yet, or haven't got an agreed upon package yet here in Canada. But the Democrats are looking to push forward a $50 billion kind of bailout or support structure for the travel industry down in the United States. Canada's ours a bit tied up behind the refunds. Of course, you know, a lot of people had airline tickets, and you know, whether they were promised a refund and haven't received it yet, or instead of refunds, they just got use it later, and some of them had expiry dates on them, some of them didn't. But a lot of people still have money tied up with airlines that they didn't get a refund. The government is pushing, of course, if they are going to offer any kind of bailouts or support to the airline industries, they have to refund those passengers, and the airlines don't want to do that. So that's kind of the impasse here in Canada. So we haven't seen anything on that front. Biden in his latest package, or the Democrats' latest package, is pushing for the $15 minimum wage, which would cut about 1.4 million jobs out by 2025, and add about $54 billion over a 10-year process or 10-year period to the U.S. budget deficit. You know, that's the report. So I'm reporting as it came out. However, obviously the plan is not to just cut jobs and add to debt. The idea is to actually add jobs at that higher pay, making sustainable living more feasible for people working at the minimum wage level, and you know, replace more than 1.4 million jobs over the next 4 years. And obviously that means more tax income to offset that $54 billion over the 10 years after that. So it's a one-sided story, but that's the story out there. So we're reporting it. Hedge funds have been betting a bit on the oil comeback, or big oil comeback. I don't know about big, but oil comeback. And we'll talk a little bit more about the commodity here today when we get into the commodity prices. This is a story I started talking about. We started actually acting in the portfolios in December, started early January, first broadcast. After last year, we were very much out of oil as far as invested, and weren't really looking at it as a sector. We did start moving back into it just as a long-term 6 months or so recovery play. We have seen that start to move, and now we're seeing more and more institutional money move into oil, which is a good sign that yes, we will see some sort of recovery or start of a recovery in 2021 around that sector. So it's still an interesting play there. U.S. insurances are starting to attract, trying to attract more assets as private equity are looking to add them or add acquisitions to the portfolios. In the financial sector, especially in the insurance sector, you know, the more assets you manage, the more value you can claim, or you know, to sell your company for, or sell that management of assets for. And private equity buyers are out there looking to add what we call assets under management, or AMA. And so the insurers are out there really pushing annuity sales, which is interesting because annuity sales are actually very interest rate sensitive. So obviously not a great environment for them, but either way, that's what they're doing. And we're seeing more acquisition interest around the insurers in the US. On the COVID front, in British Columbia here, the numbers have topped 70,000 on Monday. You know, we're over 1,236 new cases, and 13 people. So we've lost 13 people over the last 3 days in British Columbia. So again, still some numbers. They have tapered off, fewer than 500 cases for 10 straight days. So our roll on average is about 66%. So that has come down a bit from the peak. But obviously, Dr. Bonnie Henry, still keeping, closures or limitations in place. And we've seen 40 cases of the 2 new variants, 25 from the UK variant and 15 from the South African variant here in BC. So more variants. In fact, I heard today the UK has identified 2 new variants as of this morning. So obviously, more testing with the vaccines to be done on the variants. According to all results so far, they are doing well. So at different degrees, depending on the variant, but they do still work to a high percentage against all the variants that are out there so far. The BC vaccination, that was delayed a bit due to supply from Pfizer, Moderna, and BioNTech. The shipments are supposedly back now on track, and we should begin mass immunization starting in March. And in fact, they're saying anyone who over 80 should look in their mail, and they should be getting notice of vaccination schedules in the coming weeks. So hopefully we get it back on track and can catch up on where we fell behind. So in the US, Cisco Systems about to report. We're still reporting season. Cisco's report nearly a 1% drop in second quarter revenue. Despite healthy demand for their equipment, obviously in networking, it comes from weeks after China's antitrust regulators. It's over an acquisition with the company called Acacia that they're looking at purchasing for $4.5 billion. So not necessarily bad news, but wasn't as optimistic as the market had hoped. Twitter's going to go into post. They should have fairly good fourth quarter. We saw a big rise in digital advertising come back in the last half of 2020 after initial slowdown. I think the big thing everyone's waiting to hear about is how advertisers and how Twitter might change their forecast going forward based on, of course, the closure of the U.S. President Trump at the time, former president now, shutting down his accounts and how that might affect their sales. Ride-hailing services, Lyft is going to report. Of course, we're not expecting anything very positive out of that, as all of the ride-hailings, whether it be Uber or Lyft or any of the other ones, have taken a hit with the closures and shutdowns and just lower ridership out there. On top of that, in the U.S. news, of course, Tesla, Elon Musk out in the news with Bitcoin. He's been out there tweeting about Bitcoin, kind of talking about buying it up. So they did announce that Tesla itself has bought up 1.5 billion of cryptocurrency. So it didn't say it was Bitcoin, but cryptocurrencies, so that they can accept cryptocurrency payments for the Teslas. I'm not going to dive too much into crypto. It's a big, long subject. I did do a video on it in the past if you want to go check it out. So you can find that on our YouTube channel through Mike on Money. But just to highlight, the big problem or the big challenge is regulation, because these cryptos are not regulated, which is the whole thing that attracts people or originally got them to be kind of a thing. Was people able to do, call it black market, gray market, under the table deals, transactions. So, governments don't track these. There's no ledgers, the ledger's not recorded. You kind of at a bank or anything. It's all blockchain, whole other conversation as well. There's no tracking for taxation. There's no tracking for money laundering. Which is all the things that attracted kind of a certain segment of the population to Bitcoin to do these underground transactions. So today, where are we at the tipping point of cryptos to become legitimate? For example, can you go buy Tesla or anything else with cryptocurrency? So there's a few issues I'll just quickly highlight. So one, which crypto is it going to be, right? Because people don't want to have have multi-cryptos, I'm going to buy my Tesla with Bitcoin, but I'm going to go buy, gas with, Dogecoin, which is another whole funny story, or, Facebook wants to come out with their Libra cryptocurrency. Apple wants to come out with a cryptocurrency. Obviously, people don't want to be exchanging between cryptos back and forth, depending on what they're buying. So that's one issue. So how is it going to be standardized, and who decides that? And is it by country, et cetera? Secondly, money laundering is a big thing. You know, I could be in China and upload money, cash into Bitcoin or a crypto, and then, you know, fly to Australia and download or pay with it, or, you know, download it and sell it and then put it into the banking system. And, you know, how does anyone track the source of that? Because that's a big thing about moving money around the globe or even around the country. You know, money laundering, to track that is, you know, what was the source and where is it going? So that's a problem with it. Obviously, you know, easy thing would be someone put their money into a crypto, buy a Tesla, turn around, sell the Tesla for dollars, and then deposit the dollars in the bank, and you've now just cleaned a bunch of money. So not great for governments that way. And then also tax, like how you charge in sales tax on cryptos, as it's not tracked or monitored. So all these problems have left world banks, not just the US, not just Canada, but world bank, central banks, scrambling to figure out cryptocurrency and how they're going to regulate it. The problem is, once they come in with regulation and standardization, all the appeal of crypto goes away. It just becomes currency. So that's the challenge, I think, around crypto. There's also limited supply right now, which is, you know, driving the price up. So all those different things. Again, I don't want to dive too much into that. Probably spent too much time on it already. But that's what's going on with Tesla and Elon Musk. Anyway, EU Vestager is warning Apple to treat all the apps equal amid their privacy dispute. So this is another antitrust dispute with mostly Facebook is kind of at the forefront of this. And this is Apple wants to build into their phones a feature that basically will allow you to turn off all tracking by any of the apps, right? Regardless of what the apps service policies say, just basically you'd be able to turn it off, and the apps wouldn't be able to do any tracking at all. And that represents the estimates around $25 billion annual revenue for Facebook, where they sell that data to their advertisers. So, you know, there was one of Apple's engineers came out and said, you know, you might have something tracking turned off on one app, but they did an example of a father and daughter who were going to the movies. The father, you know, on Google at home had tracked or looked up the movie theater times at a local theater, you know, and checked traffic, and then got in the car, and two of the apps were tracking their movements. They took a photo when they grabbed a bite to eat. Of course, the photo tracked something. And if advertisers go in and buy up kind of this collection of data from different providers, they could actually follow you your entire route. They can track, you know, what you like to buy, where you like to go, where you live, what you do. And this engineer kind of mapped out this individual and, you know, who was in their family, how many people lived in the house. It was quite a bit of data. So Apple, you can look at it as a good thing, is trying to put this feature in to block that. And some of the apps, again, Facebook being one of the bigger ones, they're saying, no, we need that. That's a big revenue source for us. So here's the battle. Vestager is basically saying, hold on, okay, if you do this, Apple, that's fine, but you can't make exceptions. So you can't, you know, give favoritism, say, to Facebook, where they would still get it, but all the other ones wouldn't. So, you know, just try to create a fair playing field. Hasbro also putting their earnings out, has been hampered in near-term cost pressures. You know, they had a great holiday sale or holiday sales numbers over the fourth quarter. However, their costs has increased around the manufacturer, and especially new video content. Of course, everyone's digesting a ton of video content through streaming services, and that just they've increased in cost there. Other Apple news: Hyundai and Kia were in talks with Apple over a car deal to build the new Apple car. So there was a lot of speculation. You know, those early talks started to take place, and a lot of people piled into Hyundai and Kia as in stocks as speculation that Apple was going to sign the deal. Kia and Hyundai are now saying those talks are off, and that wiped out about 8.5 billion off the market value of those stocks, given it doesn't look like they will be the ones building the Apple cars. And these are the self-drive Apple electric cars that they're gearing up to start to launch. Electric truck manufacturer Exos is in deal stocks to go public, so it is IPO. This makes a ton of sense. I mean, you've got a hot, as we're going to talk about, environmental or ESG market. So electric vehicle manufacturers are very much in the press. You know, maybe on the skirt tails of Tesla's early moves, but seen a very large appetite for people to put money into these companies, and the IPO market is quite strong. So they've just signed kind of a blank check acquisition. Just means that it's going to be best raise that they can get with the next gen, which is a acquisition or financier to take them public, and they're estimated around $2 billion. So why not take the money while the money is hot for the company, especially as they look to expand. On the Canadian front, before I get into this, just news this morning, if any of you are big fans of TSN 1060, which is the Bell radio station for sports, has just been closed. Bell completely shut down, effective immediately. Everyone laid off, and that affected not just Vancouver, but there was Hamilton, I think Winnipeg, and Toronto stations as well were all just shut down today. So not great news for anyone involved there. I'm not sure how that market's going to adjust with that closure, or if Bell's going to come out with something new. But certainly the early news we got on that is not much other than the closures. So we'll keep an eye on that for you as well. Canada Nickel, which Canadian nickel miner, has been in talks with the U.S. government over supplying metals to the EV battery. So we're going to talk more about this infrastructure, and we talked about it previously in the electric cars segment we've done in the past. You know, it's not just buying the companies who are making the cars where the opportunities are, but there's a lot of metals, there's a lot of products that go into it, that into that supply chain, you know, that will do quite well. And nickel, obviously, one of those metals that are important for the batteries. Li Ka-shing, which you might not have heard the name in a while, but he's still out there. He's back in Well Health to buy CRH Medical for almost $300 million. So this goes to, again, some talks we talked about last year about how the pandemic made a seismic shift for disruptive technology. So this is, you know, technology's ability to come in and change or modify how we approach existing industries, make them more efficient, make them more profitable, make them faster growth. And we talked about that around the health sector, you know, this telehealth or a video health access to doctors. Well, here's another example of more investment going into that market. Well, you know, backed by Li Ka-shing, but you know, buying the CRH Medical to get access, Well Health access into the U.S. market and continue to expand that. The Canadian province of Alberta has backed down from reopening the Rockies to coal mines. They haven't backed around the idea completely for the open pit coal mines, but has backed off a little bit, which is good, you know, given everything else that's happening around energy. That's almost a bit of a step backwards, and hopefully, you know, we see a little bit more thought going into the environmental impact of those. On the dollar front, the U.S. dollar front, it's continuing its decline. You know, we did see a little bit of surge up after the election. I'd say surge up. It ticked up a little bit, but the momentum is down. Obviously, with this new stimulus package coming out, more printing money, more inflation, it would drive down the dollars. Also, we saw January worse than expected non-farm payroll report. So, you know, just concerns around the job outlook. Even though I mentioned in December it was slightly better, it wasn't overly optimistic in the U.S. either. In Canada dropped, but mostly it wasn't as optimistic that the U.S. was going to recover way faster than, say, the rest of the world, Europe or others. In fact, it looks like it's going to be a little bit slower. As I mentioned, Bitcoin on the news of Tesla and Elon Musk there saw a big jump to $47,100 US. That might have changed dramatically since now, or since I pulled up those numbers, as it does move on an hourly basis, but that is a new high for it. So that's per Bitcoin. We'll see where it goes. It moves up wildly as much as it moves down wildly. And the bond market also ticked up slightly, just on some auction of some 3-year notes from the U.S. government, as they raise money for government debt. On the commodity front, oil did tick up. It broke through $60 on the futures, which is a far cry from last May when it was minus $34 a barrel. So $60, it is a high. For first time in a year that we've seen it at that level. That doesn't mean it's taken off to the sky. Obviously good news for that industry as they shore up the pricing a little bit. Most of that around production cuts and drop in inventories, which is being managed fairly well. We still haven't seen the demand increase, but first step towards a real recovery around that commodity. Gold prices, of course, with the US dollar down, did rise a bit. And of course, the outlook, despite a little bit of wavering in the price recently, the outlook is still really strong for gold, especially with another almost $2 trillion stimulus package coming out of the US, supports the metals pretty strongly. And silver is in there too, by the way. I haven't talked a ton about silver. It's usually takes a back seat to gold. In recent weeks, it's been in the front seat, mostly due to Reddit, but not completely unwarranted. Silver, a cheaper commodity, but still one of the precious metals that generally moves with inflation as well. So let's talk about ESG, or environmental, social, and governance investing. And the big thing, and I've talked about this in one-off videos, but I'm going to highlight a few things. The first thing when we talk about this is to really understand what you're looking to invest in, either because you think it's a good investment or because you want to focus your investments ESG. So there's kind of two camps out there. People who are investing in ESG because they think there's growth there, which there is, and we've talked about that. Or if they want, from a support standpoint, say, hey, I want my portfolio to be ESG. Now, we are ESG here. We actually have our desk in the UK, which is our central desk, but it's our global ESG desk, was just nominated for one of the ESG Managers of the Year awards. And myself, I am a member of SRI Canada, Socially Responsible Investing Canada, which focuses on ESG investing. So we do offer that for people. But the big thing when we talk about this is what does it mean to you? Because that since ESG has come out, or the concept of ESG has come out, over a decade or so ago, there's been a lot of confusion around that. It started off being called ethical, and then it evolved to kind of clean, and now ESG is the new standard. But what does that mean? Because ethical, social, and governance are 3 different things. So let's break them down. Ethical or environmental, sometimes those are interchangeable. That's focusing around the environment. Renewable practices, right? Are whatever you might be in, whether you're in mining, are you doing it in a renewable fashion? Minimal damage to the environment. Minimal carbon footprints, whether it's fishing, manufacturing, how are you affecting the environment? Are you minimizing things? So you might have seen this. So, I laugh sometimes, these ads, they say, show a pipeline with this, I see a picture of this pipeline with this green forest, all grown over, and they say there's a pipeline here, but it's beautiful. And then they show a lithium mine, which goes into your batteries. And an open pit lithium mine looks horrible, environmentally damaging. Those are extremes. Obviously, there was a lot of damage to put the pipeline in. I'm not saying it's good or bad, but there was, and they repaired it. And the same idea with lithium mining. Some are better than others, but that's the thing. When you're investing in the environmental aspect of things, how good are those companies in their areas and have a minimal environmental impact. So that's one aspect that some people might want to have in their portfolios. The social aspect, so now this looks at how they treat their employees, their suppliers, and their customers, right? Like, how socially responsible are they? Are they acting well for the communities? Are they, do they pay their employees properly? Do they give them sick leave? Do they, you know, as far as the suppliers, do they do everything to crush the suppliers' pricing and profits and business just so that they can get profits? So there's that social aspect. Are they being socially responsible to the community, to the health of the economy, to the growth of everyone involved? And then lastly, governance. So governance, this is, you know, legislation. Are they working to improve the world, improve the countries that they operate in? You know, do they work with local authorities to, you know, find solutions, and stakeholders? And when we say stakeholders, it's really important difference between shareholders, because you can be very responsible to your shareholder, but your stakeholders are more than that, right? The stakeholders are the communities that you're involved in. It's the countries and the cities that you're working in, and it's the environment in general, the world in general. So that's what the definition of ESG. So when you look for that in your portfolio, just know what you're looking to get out of that. You know, some people say, I don't want sin stocks, or I don't want oil, or I don't, and those are all good requests, and those are very doable in portfolios today. But ESG is not necessarily no oil or no fossil fuels or no. It just means that they're going to focus on the companies who are doing a really good job in their industries in those sectors. Now, a lot of ESG can be completely outside of environmental impacts, and you can ask for that inside an ESG portfolio. So I want to define that a bit more detail, because it's important to know what you yourself as an investor are looking for. So what's driving this sustainable investing? Well, there's a few things. Two major things, I think, that we're seeing. So one is money flow. So we're seeing a lot of interest and push, not just from you know, individuals, but pension plans, institutional investors, you know, corporate investing are basically saying, hey, we ourselves are trying to be ESG, so our investments have to be ESG. So they're going to their investment managers or their portfolios and saying, everything in there have to meet a certain standard of ESG. Now, there is no current global standard for ESG. There are organizations trying to get a consensus on what fully qualifies as ESG, but we're not quite there yet. So there's this money flow of companies and pensions saying, hey, I only want my investments in ESG, therefore get rid of everything else and go there. So we're seeing this flow of capital into ESG, which is, you know, important if you want to see good growth. Is you have to have interest from the capital sources. Secondly, we're seeing technology catch up. So, you know, I mentioned coal, Alberta talking about coal, and of course the last administration in the US focused a lot about bringing coal back. Coal didn't die because everyone said, hey, that's dirty energy. That was a part of it for sure. The biggest part of coal kind of fallen off the map and, you know, shrinking as an industry massively, is that technology got better and cheaper, right? So as industry said, hey, if we're going to generate power, it cost me, you know, 1 cent to create that much power of coal, but it only cost me half a cent to do that through whether it be natural gas or other more renewable sources. And that's what we're at right now on the technology front when it's around ESG. So you have industry saying, hey, not only can I say I'm ESG if I invest in this, but I'm saving money. And that's a big driver, because companies, if they can do it cheaper, will try to do it cheaper. If they can't do it cheaper, you know, if the non-ESG version is cheaper, they will try to push for that. But we're at that tipping point. In fact, I'd say we're probably just past that tipping point where the different technologies are now pumping out, whether it be energy, vehicles, processes, all these things are starting to tip way more towards ESG as being the cheaper source. So that's going to push the others out, right? That's going to push the non-ESG or the non-ESG practices out of the process and out of the spending chain over time. So that's where we see a lot of growth. The last one is really important to keep in mind, I think, about not just investing, but that social aspect of the change that we're probably going to see a lot of over the next decade is millennials and Gen Z to a large extent, because this group combined, certainly even just the millennials alone, in the next 5 to 6, I think it was by 2025, I think I saw, we're going to make up 25% of the population. And right behind them, you have Gen Z, which have a lot of similar views, not just on ESG or environmental outlook, but very different outlooks as far as governments and kind of priorities. Let's call it prioritizing what's important to this generation. So much like we saw the baby boomers come through the 70s and 80s, have a massive impact, political, social, environmental impact because of their size, because of the power of their vote, their interest as they went through their different years. You know, in their 20s, of course, you know, they wanted everything more for free. There was a lot of support around that. Everyone does in their 20s because you don't have any money. And then, you know, their family important, you know, everything focused on family when they were in their 30s and 40s, and then it shifted to kind of retirement and taxation, all that. So now we have this other large group that is going to come through with their votes over the next decade and even longer. There is no group, generational groups, even close to being as large as them when it comes to voting. So they have a large interest in sustainable investing or sustainable companies. And with that pushing governments to follow what they're asking for, because of course governments want to get reelected, and this is the group with the votes, that's going to push a lot towards ESG investing, certainly over the next few years, but even I'd say into the next decade. So, you know, will sustainable investment help us drive, will sustainable investments help us drive sustainable business activities? Kind of covered that 100%, you know, the more investment we make into it, it's going to drive the cost down even further, making it way more viable for companies to get on board. And we're seeing that with cars, right? Like, we'll go back to Tesla's kind of call it the first to market when it comes to the electric cars. You know, they proved you could go and run a car cheap or cheaper than gas. Now, there's a lot of stats and arguments around whether, you know, how that works out, you know, based on the price of it and everything else. But what we're now seeing is all the new cars, electric vehicles coming into market, coming in much cheaper, because now there's more investment, there's more economies of scale, there's more numbers as far as sales go. So those cars get cheaper and cheaper. And when those entry points get to equal or potentially less than gas vehicles, all of a sudden you now have that tipping point. And that's what, you know, investing in sustainable will do. And it will just drive more business. Elon Musk invested in electric cars in Tesla, proved their viability, and now there's way more invested by every car manufacturer in the world now, and even a bunch of new ones, to bring more business in that area. Simple supply demand. So what is the future of environmental and sustainable investing? So for 2021, I wanted to highlight some areas that are key themes in ESG in investing that you might not see every day, or you might not be looking for in the press. And I think they're key areas to keep an eye on or focus you know, opportunity to. So one of those is cybersecurity. Talked about cybersecurity, left cybersecurity for over 2 years now. Believe it or not, that's ESG, very ESG. Not a lot of environmental impact, socially responsible, and good governance, right? So it falls in those categories. It's one of the biggest areas of investment when we talk about ESG. So, you know, very important. You know, another one that's really surprising is oncology. People are living a lot longer. We have an aging population. Cancer is the chances of getting cancer goes up the longer you live, as far as the population goes. But the survival rates now are hitting 80 to 84%, which is amazing. And the more investment that goes into that, the more opportunity. Again, we hit the environmental factor. Social, obviously, very big impact on social, and then governance again. Very positive on helping people live longer and help people survive a horrible disease. Moving probably a little bit more obvious one, electric. Now, when we talk about electric, we're talking about batteries, we're talking about the supply chain, not necessarily the manufacturers. In fact, not all the manufacturers actually check that environmental box or social box, or even governmental box or governance box when it comes to their manufacturing process. And this goes back to, who's cleaner, who's doing it right, what's their carbon footprint, how they treat their employees. So we do, though, look really closely at the supply chain, the parts or the battery technology, because what's really going to make a massive difference when it comes to this moving forward, you might hear it sometimes in the news about storage, is the battery that can store that energy better, longer, last longer, are the components recyclable, etc. Also, hydrogen's in there. Hydrogen's making a big comeback, as these electric motors are being run off of hydrogen now, as opposed to just a hydrogen combustion engine. Those are out and also making a bit of a comeback. But the hydrogen to electric conversion, using the electric motor, and electric motors last a lot longer than combustion engines. Obviously, a lot less moving parts, a lot less maintenance cost, etc. So that's a big area, is around the kind of that electronic area. Another one is water. Clean water just started trading as a commodity. We take it for granted, probably here in Canada. We're very, very fortunate. A lot of fresh water in Canada, and in a mature country where we have access to it through, fairly good clean water through our taps. But not everywhere in the world has that, and investing in water or sustainable water going forward is becoming a big area for ESG. And the last one, not surprising, but you probably don't have it at the top of your thought when you think about ESG, is waste, right? How are we dealing with waste? Whether it be not just recycling, but reusing. How are we taking from the landfill back into the supply or product chain? Plastics, obviously, at the forefront of this issue, not just what we're seeing dumped in the ocean. I mean, I think a lot of people will be massively shocked if they actually looked at, what you put in your blue bin every week for recycling and how much actually gets recycled. Won't get into the whole problems and issues around that. It is a massive issue, not just here in Canada, but globally, hence why our oceans are becoming filled with them. But it's not just plastics, it's everything. It's electronics, it's metals. And it's not just, can we recycle it? Can we do it cost efficiently? Remember, it goes back to, can you make it cost effective for the businesses to switch? We talk about, these metals that go into batteries. There's technologies out there actually being manufactured where they can dip, electronics into chemical baths that will leach one chemical at a time and extrude it into a reusable metal again for the next generation of battery or whatever piece of electronic that they're using. And then they dip into a different bath, they get a different metal, etc. And the big thing to keep in mind about that is the big costs of metals is not the metal itself, it's getting it. And not just getting the metal out of the ground, but getting it to where it needs to be for manufacture, right? It's got to be shipped. That's a lot of carbon footprint to ship things, depending on where it's coming from. It could be from around the globe to get to the manufacturing point. Whereas these recycling baths can be built right next to your manufacturing centers. and you skip all that carbon footprint or carbon cost of moving those things. So there's a lot of areas in ESG that we don't think of every day, and I think are going to be very big themes in 2021. Again, you know, cybersecurity, oncology, health, you want to call it health, the electric supply chain, water, becoming massive around the world, and waste management or waste recycling or waste reuse is a massive area of growth, as we as a planet have to figure out how we take waste and reuse that, and no matter what kind of waste that is. So those are the themes I kind of want to cover off this week. I know, did I go over time? As usual, a few minutes over. I try to target the 45 minutes. But with that, thank you very much for joining us. Again, go to mikeonmoney.com if you want to see this or more. Love to hear your feedback. Enjoy the sunny weather and stay warm out there. Thank you, everyone. Take care.